Hi guys, CryptoBuzz UK here. I hope everyone is well wherever you are. I'm recording live from the UK. What has been a sunny, really nice morning and afternoon here in the UK. Obviously, we've had a lot of sell-off, a lot of blood in the streets. It appears a lot of panic, a lot of people not selling because they want to, because they have to, i.e., liquidations and so on. I just thought I'd shoot a brief video, show you exactly what's going on from my perspective. Back to the monthly chart, as you can see, this key level of 28,300 has held us up since the best part of December 2020, so over a year and a half. So obviously we found support on it, and so on. And obviously the monthly candle of June, we've officially broken it. Okay, it's not confirmed just yet. Okay, so if we retest it and reject, that's an official confirmation of a rejection. I won't worry too much about that now, but what you can see here on the monthly chart, this is the 20 EMA. You can see we are curling downwards now, so that is pretty typical of bear market stuff. You can see we tilted down here, sorry, we curled down here a bit as well. Anyway, that's really where we are on the monthly. We've broke a key level. Next logical level, which is why we've moved pretty quickly, is the $19,700 level. And obviously, if we break that, it's possible. Too far in the future for now. We should really be reaching this $14,000 level. All right, so down to the weekly chart, I'll show you what I'm seeing here. So we have the 200 EMA, we have the 250 EMA, and we have the 300 EMA just there, in addition to the 20 that I mentioned. This is a weekly chart. You can see that very quickly we lost this level, and within a short order. It's Monday, so this is today's candle, but we've got a week before, so literally within 8 days of trading, we've busted through. We've gone from best part of $31,000 to $32,000 level, all the way I think we tagged 22,700 today. We've obviously been bought back up a little bit to 23. I do think the thesis remains the same. We've still got more downside to come. It never goes down in a straight line, and nor does it go up in a straight line. So we've got to be respectful to the market and the charts. But is it a significant leg, a noticeable leg, a leg which will be discussed in future months, years to come? Of course it will. This sell-off, effectively is a continuation of this. We had the bear flag going up, which we talked about on the channel, you might remember, and you'd expect to move downwards too. I do think over the next couple of days we do breach the 200 SMA, which is just shy of it's about 22,500. I think we bust through that and eventually test the 300 EMA at around 21,000. I do think we'll have some chop here. It's potentially the case we get some chop here too, around this level now in the next couple of days, only because we've got the important FOMC meeting in the next couple of days. It's quite possible, if that's as expected, we might continue sideways. If that is bad news, i.e. 50 basis point rise as a result of the inflation figures last week, then we might see a continuation into 20,000 region. All right. Timing wise, this has a couple of months to play out. At what point would I be adding? I'd be adding, it depends how long your time horizon is. If your time horizon is a week, listen, just wait. If your time horizon is a year, it's probably not a bad point to buy, but there will or should be, in probabilities wise, better opportunities. If your time horizon is 2 years or more, it's not a bad area to be averaging in. All right, it's not financial advice. You do what's best for you, as always. I'm just sharing what I am seeing from a couple of years' experience. I'm not the best out there, but I'm certainly not the worst, and I'm sharing this from honest truth. You can see from the sentiment, read the heat map. We're pretty much in this zone here that we have been in. It's not quite as green as you'd expect on a market bottom. You can see here, I think we are in this region of the cycle of the sell-off cycle, the bear market. But I don't think we've tagged them green or dark green, highly volatile levels. In a typical capitulation candle, you expect to see volatility to the upside and volatility to the downside on a semi-continuing basis. Here, what's happened, it seems to me, if I go down to the 4-hour chart, you can see we've had sell-off, bounce, and then sell-off, 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 continuation. And, you know, there's not really a choppiness in it. There's not really an upswing followed by a heavier downswing and then an upswing. It's just been straight down. This smells to me like a lot of liquidations, a lot of over leverages. I understand there's been over $1 billion worth of liquidations today. All right, so that's within the last 24 hours. Those liquidations will be long liquidations. Those people that betted that the market would go up, obviously they've been liquidated. So naturally, what's happened here, we've got a lot of shorts built up over the course of today. Everyone's got bearish, really bearish, and everyone wants to ride the wave down. Shorts, traditionally speaking, strictly speaking, will probably come late into the trend. And those late shorters, as we always know, will get punished. And that's why I do think we're going to see wicks to the upside only to be sold back down. I think we've got two here. We're obviously finding some sort of resistance at around 24.2. But either way, we're early doors in this. This 4-hour candle has the best part of 2.5 hours to go. If we go to the daily, you can see that we've had one slug downwards. And I do think that we do see some chop now. We've tagged a really important level. We were a matter of dollars away from the 200 weekly SMA, which is a very important level, as most people know. I do think, whilst I don't think we're going to get bought up straight away, I do think we chop around in this area and continue wiping out those leveraged shorts and also preventing those very short-term traders from taking money out of the market. So I do think there's going to be a lot of chop expected, particularly around Wednesday's meeting at the FOMC outcome. That's going to be crucial to decide which way the markets go. Obviously, you can see here we've got huge gap downs here on the S&P 500. We've tagged a resistance. Sorry, we've broke through a resistance zone that we've previously tagged. It's anyone's question whether we're going to find support on it. It doesn't look promising at the moment because, as you can see on the S&P, we found resistance at a very crucial level. Support here. There was obviously backtested support here going into 2021. In terms of where we can go, you can see I've highlighted a number of levels here. I do think eventually we test this level, which is immediately following the Corona dump, which is around 3,590 on the S&P. And then, I do think this is probably, I say worst case scenario, I do think this is possible, not immediately probable, a retest of the pre-COVID highs, which is around 3,400 points. Nasdaq's pretty similar. We hit resistance and fell on the S&P. You'll see on Nasdaq it's very similar. We hit resistance here and we fell. Okay, so it's a significant day for all risk markets. Context being, as you know, liquidity is being sucked out of the system. We've got rate hikes. There's no indication, that there's any sort of pivoting or reversal on the Fed's hawkish stance. So listen, what's happening now, it's fair to assume it's going to continue. I do think we've got a lot of work to do in terms of monitoring the price action and making the best out of the situation. I did a video a day or two ago in the last 48 hours explaining that Bitcoin is in these two structures. Lo and behold, we found support on the base of this downward sloping parallel channel. I suppose it's as you'd expect. It's kind of an anticipated bounce zone, and yeah, it appears to have found some temporary support here. Do we test the middle of the channel where we could do? We certainly could. That will reflect the sort of approach here. So that's also on the cards as well, but it's good to see that stuff that we've drawn out, probably about a month and a half ago, is still relevant in today's price action. Anyway, that's all for now, guys. Keep calm, stick to the plan. Nothing crazy to do in terms of action or inaction. Buy the dip if you've got the long-term time horizon, but I do still think there's a lot more downside to come, as you can see from this quite simplified market structure chart, which tells us that 19.5 is the next level. And if that breaks, inevitably, I think we test 13,800, where there is, as I previously mentioned, much more significant market structure for the a key accumulation zone and a key area for a bounce. All the best, everyone, and I'll speak to you all on the next video.